Hey team, it's Tracy coming to you from Traders Academy again. So today we're going to start our series of videos on indicators. Indicators can get super confusing, so we're going to start with one that's super simple. So volume, very easy to understand, super important to know, right? So what is volume? Volume is simply the amount of shares that are being bought and sold by traders, right? So every time a trader buys and sells a stock, it creates volume. It's the amount that's being bought and sold. So this can be volume. When you're using it for analysis, you can use it 1 minute, 3 minute, 5 minute, weekly, monthly. All of them. Volume is always going to be so important. So buying a stock with low volume or low liquidity can result in you actually buying a stock at a high price. The volume dies out and you're holding this stock all day, hoping that somebody's going to buy it. But there's just no volume there. So you're probably going to end up, best case scenario, selling it for even. But more than likely, you end up selling it for a loss just because nobody wanted to buy it. At the moment you bought it, there was a ton of volume, and then whatever happened, and now you're stuck with a stock, probably at a price lower than what you bought it, which is why you're still holding it, right? Which is why you're bag holding. We call those bag holders. So when you notice that a stock is moving up in price, but there's low volume, that's usually a sign that it's not very strong. We actually sometimes will call this a pump and dump, right? So a trader with a ton of money will find a stock that has a low float, and they'll buy a bunch of shares. It'll make the stock shoot up, even though there's low volume. And then other traders will come in. They're like, "Oh man, it's moving up. Let's get in," and they'll start buying in. And then that initial trader will then sell all their shares, and the stock will start dropping faster than you can blink. So, a trader basically pumped money into it to get people interested, and then, just sold out once they made a few bucks. And they were able to do that because there was a low float. So, what is a low float? A low float is basically when a company only has, so companies, when they go public, they only have a certain amount of shares that the public is allowed to buy. So the fewer amount of shares, the more they're worth, right? So it doesn't matter if there's no news, but let's say news comes out, people want to get into this stock, and if there's a low float, it's going to go up like crazy real fast. And that's high volatility. So, the stocks like Amazon or whatever, they got billions, literally billions of shares that the public can buy. Those are low volatility because it's going to take a lot of movement to get that stock to move, crazy amounts, right? So it's almost like supply and demand. Basically, the fewer shares that are available, the more they're going to be worth if people want them. So the volume can be used to gauge the momentum of a stock. If you see our daily watch list, you'll see that we have support and resistance levels, right? Volume is, let's say a stock is moving within the support and resistance, it's consolidating, trying to figure out where it's going to go. It's going to take volume to make that stock break through the resistance and go up. Which also, if it's consolidating and the volume goes up, but it's selling volume, it's gonna drop through the support, and then we all know how that goes. Or we will eventually, once we get more videos out and more of our teams gets to understand it. So if you're day trading, you want high volume, and ideally you want a low float. High volume, low float means lots of money real quick. Okay. So I guess a cautionary tale about, seeing a stock, it's moving up, you see the volume, and then it kind of dies out. You're going to hope it's going to go back, but if the volume is not there, who's going to buy it? Nobody's going to buy it. Nobody's watching it. Nobody's caring, right? So you see it going up. Don't get FOMO, fear of missing out, and end up on the wrong side of a trade. It's going up and you get in too high and then it sells out. People don't want it. You're stuck with it. So many bad things can happen. Averaging down, I mean, selling for a huge loss. I don't want to scare you. It's scary stuff. It really is. Yeah, we don't want to do that. So, how do we use volume? So often in the alerts, you'll see XYZ has a volume spike. That does not mean buy in. It means there's action happening here. We don't know. Maybe there's news. There's no news yet. Watch this thing, right? That's all that means. A volume spike does not mean jump in, because again, pump and dump. It can always be a pump and dump, right? So we want to wait for a pullback because it can fade. So news can also manipulate the volume of stock. Let's say you have really good news and you see a volume spike, and then obviously the price is going to surge as well. However, the bad news will do the opposite. You'll see the stock just boom drop. Selling volume will increase, and that's kind of when you know if you don't want to hold through the drop, sell. And if you're more of a long-term patient trader, then maybe hold on. But it's going to take way more analysis and indicators. That's not something that we're going to cover today, right? So there's a couple examples that I wanted to show you so that you can actually see volume in action. So, all right, awesome. Here we go. All right, first thing I want to do is open up a stock that we traded on Friday, Pixie. It had some pretty good movement. So we scroll over to Friday morning, we can see that the volume was very high. We can see a bunch of these tall bars because the volume was high and the price was going up. Then you see around 6:22, someone or a bunch of sellers started selling their positions, and the bars show that there's a very, very heavy selling volume and the price dropped. Then as the morning went on, you see that the volume stabilized a little bit, and there was some price movement. There was still some price movement, but the volume just wasn't there. So around 1:30, you can see this bull flag forming, and trader said, you know what, I'm going to get back into this. And you can see where the volume increased and the price shot up. But the volume increase wasn't enough to make a new high of the day, which was 6:22. Yep. So around 5:80, the selling volume comes in, and then you can see where the volume died down and stayed low for the rest of the day. So that's an example of where the volume can come in the morning as usual. You'll always have volume in the morning. And then the sell-off. And then you can see that bull flag again. And then once that bull flag formed, traders came in. But once that sold off, traders, decided, you know what? No, I'm done for the day. It's Friday. I'm going to go home, spend time with my family, whatever. So it sold off. So now I want to show you an example of how a lot of tickers are going to look like in the morning. So if we look at EYPT, let's go back to Friday morning. You see pre-market. We go back a little further. So we see pre-markets really high, and you get an alert, and it says EYPT moving. So you look at it, and it's at 108, and you jump in, and it gets to 119, and hopefully you're securing a little bit at 119. But at 119, you can see that it starts to sell off, and you wait for the bell and hope that, the morning bell is going to bring volume. And while it does, bring that little pop, because again, the morning always has volume, it has that big sell off, and then volume just stays low for the rest of the day. And, that's not a good sign for, the stocks we want to trade. So, that is what we have for our video on volume. As always, if I confused you, if I left something out, please comment. We are always very responsive and enjoy receiving feedback from our team. Thanks, guys. Happy trading.